Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency, but also simultaneously we will take a look at other markets. It's because cross-market analysis seems right now is becoming really very important. So a lot of events and sometimes just the euro currency alone can't reflect all necessary information that we need for making decisions. First thing that I would like to mention is actually terrible situation in California. So if you probably know that it's actually a big fire there. It's almost destroyed all the state except some regions. And the reasonable questions here, everybody understands that all this real estate have been insured. And well, what insurance companies will have to do in the current circumstances? Seems they really big chances on bankruptcy on even big companies, because to compensate this hurt actually will be very difficult. Correspondingly, you could suggest by the logical, just common sense conclusion, what will happen with the banks if the insurance companies will not able to pay out this a lot of money, and actually it's also will make impact on the banking sector as well. So it's maybe even the bond market, just because many companies just issued bonds and so on. So that might be really very important. Currently, it's not known yet the overall damage of this fire, but well, it's yet to be known. But it might be really extended as in time, as in terms of the impact on the overall markets. So, but that's a bit longer term situation. In a shorter term, on a daily chart on euro currency, maybe we will not see some big things. The only probably new pattern that we've got is grabber here, this bullish grabber. But I wouldn't pay too much attention to, because by taking a look at the other charts, for instance, if you take a look at the daily euro currency futures, you will not see the grabber here. It's just changing of the trend into bearish. Here we do not have it. Although on the dollar index we do have this grabber right here, but you could see what's going on. Market just moving high, coming close to the top, and no visible reaction currently stands here. So it's some kind of the, well, I would identify this as a kind of the dynamic pressure, and chances on the possible here some spike or something seems stronger and higher than just immediate downside reversal. On the 10-year bonds, we see the same thing. Take a look at the yields. When they're reaching 4.75, 73. Minor pullback has happened, but today, once again, yields are rising. So it means that this action, it was not some kind of the background for reversal recent bad auction on 10-year bonds. This also was not an occasion, and actually yields are not actually would like to give up. So it's actually keeping on a upward action, and this performance mostly stands supportive for the upward action here as well. So taking all together, on the euro currency we have the not very pleasant background, at least for the bulls, that this downside action, it might be starting of the possible trap here, possible challenge of these lows. So when this grabber has been formed, situation was not as obvious, and we said, let's see, it won't degrade, this grabber will be able to work. But now the bearish signs are becoming more evident, and actually chances of the taking out of these lows, trying to make some testing of these lows, at least, if not speaking about downside continuation, seems right now very high. We could say that today we will get the payrolls, and probably payrolls might be weaker. So just for information, Reuters poll suggests that it will be 150,000. So we will see. ECB report was slightly weaker. Have you seen any reaction there? No. So here is also, maybe we will get some intraday pullback if numbers indeed will be weaker. But I do not expect that this will be enough reason for possible sharp reversal here. barrel should be somewhere near the zero to trigger some big action here, which hardly possible. So it means that in the nearest time on the fall time frame chart, if not speaking about direct breakout to the downside, the maximum that we could count on is probably butterfly. So here might be some retracement based on bad barrels or something, but probably it will give us just a more extended bearish reversal pattern. So the butterfly might be formed at the best. In a normal scenario, euro currency could just trying to break it lows, because here 618 support already has been broken, shape of the hand shoulders has been broken, which means that market should trying to break down the bottom of the head in the nearest time. So from that standpoint of view, personally, I do not want to consider any long position. Speaking about taking the short, you have some options. So once again, either split, we talk about this every time, or you could try to catch this pullback, but in this case you will be involved in a process of the gambling about the payrolls numbers. So if they indeed will be worse, then you could get better entry opportunity with this butterfly or something of this kind. So that's actually what you could try to consider. Downside target nearest one will be 101.65, which is very close to the 102 XOP. So almost has been tested here. And very close to the 101.50, 161 extension of the daily butterfly. This will be, by the way, it's oversold on the daily chart as well. Finally, on the hourly chart, another thing in favor of possible retracement, or at least you could try to use it if you would like to. Scalp traders, those who already take this risk and trying to take the long position, also could use it as a background. So you can see, yes, the market was not able to form any ABCD to the upside that we talked about. Instead, we've got ABCD to the downside. And currently we have minor Gartner's triple to buy in place. So that could be treated in two ways. First, as I said, scalp traders could consider it for position taking, just hiding stop somewhere below its lows, hoping that barrels will be bad and you will get this rally. Second is this probably might be background for a possible retracement and a reason to wait a bit or to split the position with a possible counting on possible higher action, maybe even to 103.70 area. So theoretical chances for that exist. As usual, before payrolls, it's a lot of uncertainty, and I don't think that's a good idea trying to just make some precision forecasts. In general, what we do know is that overall context remains bearish for the market, but downside action could start from the different levels depending on the numbers that we will get. So, and everybody have to decide how you will deal with this situation. Most conservative approaches do nothing, waiting for the payrolls numbers to make the decision, for example, on Monday. This also might be not bad idea in general, just to not keep the position for the weekend. So that and towards what we have here, let's see what numbers we will get.